Imagine waking up to the news that the SEC has rejected the Bitcoin ETF. What could be the potential outcomes? The Securities and Exchange Commission's decision on a Bitcoin exchange-traded fund, or ETF, is a pivotal moment that has piqued the interest of the cryptocurrency community and financial markets worldwide. This decision carries at least some symbolic weight, as it represents the government's and traditional finance's own opinions on crypto, a world they do not really understand much about though. But what is a Bitcoin ETF in the first place? In simple terms, it's a fund that tracks the price of Bitcoin, enabling investors to set up their own simple crypto wallet to still buy into the fund and indirectly invest in Bitcoin without having to handle the cryptocurrency directly. Not that we'd recommend this, but for some it may seem to be an option. The SEC decision is not about Bitcoin, but it's about the broader acceptance of cryptocurrencies in the legacy financial landscape. As the clock ticks, the world watches, ready for the dominoes to fall. The first domino to fall would be the immediate market response. Now imagine a world where the SEC rejects the Bitcoin ETF. That's right, the immediate reaction would be a ripple effect across the cryptocurrency markets. Bitcoin, the dominant player, could potentially see a temporary dip in prices, likely a short-term one though. Altcoins, not immune to the turmoil, may also be adversely affected during the same time. This volatility has got little to do with technical analysis or value of crypto coins, rather it's a reflection of purely psychological market sentiment, a window into the minds of the investing masses influenced by media narratives. Media outlets, always commenting about things they know very little about, would be quick to report on these movements. They'd likely speak about the fluctuations all day without providing much more insight into what really matters, and hint at short-term trends whether they know them or not. The media's lens would be obsessively focused on this immediate market response, picking up on every shift, every tremor. We call this background noise, and successful investors ignore this, and as the media rattles on, they'd be shaping narratives, influencing perceptions no matter the reality, and offering their opinions into the world of cryptocurrency investing that is so foreign to them. Only as the dust settles, the focus will shift from the immediate shock to understanding the SEC's rationale. Even though that's what should be covered right from the start. The media will dive into the reasoning behind a potential SEC rejection. In this dissection, regulatory concerns are likely to take center stage. Even though it would itself be manipulating the markets in that event, the SEC may still go on to express worries about alleged market manipulation, or insufficient liquidity, or the lack of a regulated market of significant size, even though Bitcoin markets have functioned just fine for about 14 years without regulation, or perhaps because of the lack of it. These concerns, if voiced, would underline the SEC's allegation that it only wanted to protect investors, maintain fair markets, and facilitate capital formation. Another potential point of contention could be the inherent risks associated with cryptocurrencies, as if these weren't present with shares, bonds, forex, or any other markets as well. These might include price volatility, technological vulnerabilities, or potential misuse for illicit activities. Even though the latter also applies to the US dollar to a much larger extent, any alleged reasons found would still quickly be exploited. By highlighting alleged risks like these, the SEC would be indicating its potentially continuing caution towards the nascent and unpredictable nature of crypto as a market governments can't control so easily. And this would be the real news in the event of a rejection, along with providing reasons lie those. Investors should then take this as a signal of quite a different kind. The uncontrollability of an entire asset class that is only becoming larger and stronger every day. The media's analysis of these points will feed into the broader narrative around cryptocurrency regulation. It will also be instrumental in shaping the not-so-informed public's opinions on crypto and the regulatory environment or the challenges faced by Bitcoin ETF proponents. With narratives like that being given, whether true or not, the reaction of major market players becomes the next focal point. The industry's response to the SEC decision will be what the media will be after, like stains on a mattress. As the dust settles on any such SEC decision, eyes will inevitably turn to the big banks affected by a potential decision like that. The responses of institutional investors and industry leaders will be closely watched, although the true crypto market is arguably driven by crypto buyers and sellers within the market more than external opinion about it by people that aren't actors in it. Still, their statements and opinions will be dissected, as the media seeks to gauge the industry's reaction, as, lacking any true exposure to cryptos, this is all it can do. A rejection of the Bitcoin ETF may prompt a reevaluation of strategies, more likely a rather short-lived shock like the infamous doobie crisis though, after which prices could quickly recover. Without the ETF as an investment vehicle, short-term Bitcoin demand would be lower than currently anticipated due to BlackRock covering their positions. Or not. This could also likely be reflected in the focus on existing investment instruments such as futures contracts or trusts. An example might be Grayscale's Bitcoin Trust. The media will play a crucial role in highlighting these strategies, providing what it thinks is a snapshot of how the industry moves in response to the rejection, even when lacking real insight into what market participants actually are doing at the time. As the industry recalibrates, attention shifts to alternative investment strategies. Without a Bitcoin ETF, where do retail investors turn? In the event of a rejection, the focus could shift towards alternative investment strategies in the crypto sphere. The adequate response of prudent investors would be to move into Bitcoin or other crypto assets directly without any middleman, as that's what crypto is actually all about. But the media will more likely recommend to turn to schemes like Grayscale's Bitcoin Trust, for instance, another paper asset that's really got nothing to do with true Bitcoins, but allows retail investors having jumped through all the loops and hurdles of KYC and regulatory chicanery to then ultimately gain exposure to Bitcoin, even though buying it outright would be so much easier. Similarly, futures contracts, agreements to buy or sell Bitcoin at a predetermined price at a specific future date, might theoretically offer another avenue for investors to navigate the cryptocurrency market, although very few investors really ever touch futures or options in everyday life. Still, in the absence of a Bitcoin ETF, these existing investment vehicles may theoretically gain prominence. The media will play a pivotal role in this shift, highlighting these options and their potential benefits, but keep in mind this doesn't mean this would be sound investment advice. Their analysis and insights will still be all over the news, further confusing retail investors about investing in general and the nuances of these alternatives in particular. In that scenario, retail investors will run back to Wall Street believing they can find shelter there. While alternative strategies provide some solace, the long-term implications of the SEC's decision remain a mystery. In light of so much misinformation, especially from the mainstream media, the journey into the world of cryptocurrency will likely continue to be an unfathomable adventure for the man in the street. The mainstream media believes an ETF rejection is not just a momentary shock, it has long-term effects. This ripple effect would allegedly trigger a reshaping of the cryptocurrency landscape, but it remains to be seen if that is so. Future attempts at SEC approval could still be prejudiced, with each rejection serving as a lesson on what needs to be addressed or improved. Moreover, a rejection could impact broader cryptocurrency adoption. While we believe in the inherent value of digital assets, the lack of an ETF might still slow down mainstream acceptance due to renewed, unwarranted negative perception. Yet the crypto world has always been about innovation and resilience. It will continue to evolve, find ways to thrive, and offer new opportunities for the unbanked. This is what crypto is all about, much more than speculative price action. Still, speculation will always be a part of the equation, but it's crucial to remember that speculation and investment are not the same. While the former is based on short-term price movements, the latter requires a long-term perspective and a deep understanding of the underlying asset. Understanding these complexities calls for a deeper dive into Bitcoin and ETFs. To navigate these turbulent waters, education is key. The world of cryptocurrencies and exchange-traded funds, or ETFs, can seem complex and intricate. Yet the fundamentals are within everyone's grasp. Bitcoin, a digital currency, operates on a decentralized network that hosts the blockchain. Crypto is a new form of asset, unlike anything we've seen before. On the other hand, ETFs are a type of investment fund and exchange-traded product traded on stock exchanges. ETFs hold assets such as stocks, bonds, or commodities, and they aim to track the performance of a specific index. Still, they are just a paper asset and thus different from commodities, from currencies, or from Bitcoin itself. The intersection of Bitcoin and ETFs brings some new dynamics into play, representing a bridge between the traditional financial system for Joe Sixpack and other retail customers on one hand, and the emerging world of cryptocurrencies where participants are usually more tech-savvy. Understanding these fundamentals can empower individuals to make informed decisions in this broader landscape. As we await the SEC's decision, the media will not stop touting commentaries about the cryptocurrency landscape, whether that'll be useful for investors or not.